It is that time again. Woo! Man, oh man. I am your host, Charles Becco, y'all. And I want to thank everybody for being here today. Man, they done clapped up the markets. Why they done clapped up the markets, man? I don't understand. Why did they clap up the markets? Kendell, man, why they put a fire hose in the market, man? Oh man. Hey y'all, my name is Charles Becco, host here at Brooklyn Traders. Former financial advisor, masters in business, trading stock market for a decade, technical analyst, yada yada yada, all that good stuff. Kendell, introduce yourself to the crowd, man.
Hey, what's going on, everybody? Good night. Peace and blessings to everybody. My name is Kendell. Part of the Brooklyn Traders. Also to say that I'm one of the original founding members, and I take pride in that. Been trading not too long now. Still learning a lot, but been trading for about 2 years now. And just what's going on now. I haven't seen this going on in a while, so I'm anxious to hear this conversation tonight. And let's all indulge and get ready for what's to come.
All right. My man Kendell. Yeah, so happy President's Day to all the former presidents out there. I doubt anyone's listening to this show, but anyway, just happy President's Day, right? A lot of craziness going on here. The stock market is getting clapped up in the futures session right now. And it is something pretty serious, right? And so before we continue, right, I just want to make sure that I get the room out to the various communities that are out there. Okay, so we're just gonna make sure we get the show up and running. 1 second. So we also do a live stream via Facebook and also via YouTube and Twitch. So it's not only Clubhouse. And so just give us a second and we are sure to get the link up to the live stream. And via the live stream, you will be able to see the charts here as we go over some of the topics. Okay. Pin this link up here. Bam. All right. So again, thanks everybody for being here. All right, so what's going on with the stock market? Immediately, Q's getting clapped up, man. QQQ futures are down 2.25%. We have been tracking the way that this has been looking. We had a support level here at around 14,000. The support level broke. It held Friday, right? But barely held on Friday. Right now, that support level broke and down we go on the QQQ futures, right? Again, presently down 2.5% on the Qs. SPY. Right now, SPY or S&P 500 is down 1.5%. Let's look at the YM, which is going to be the Dow. Dow presently down almost 1.5%, right? We're getting clapped up so bad. Even my algorithm is like, the stupid algorithm that I have here. It's not like really. No, I shouldn't say algorithm. I would say this is a indicator set. This is not an algorithm. The indicator set that I'm having is actually telling me that I should actually buy the dip here, but I actually know better, right? And so even the indicator set is confused as to what's going on. It normally is pretty accurate, right? It gives us these clear kind of buy signals, right? And so we're getting clapped up so badly, right? The indicator set is confused and doesn't know what's going on, right? That's because we're experiencing an exogenous risk. What is that? This is like something that comes out of nowhere, not something that's like foreseeable, um, not a systematic risk, right? Not something that you could simply, try to diversify away, right? And so on the daily time frame here, let me go back to the Qs, right? Because that's the more interesting. We got a fresh MACD cross downwards on the daily time frame. We also had a squeeze fired as well to the downside, which basically means that the chart was gathering up some strength. And after it gathers up some strength, it gathers up some power, it's starting to release some power, right? And so right now, again, last week with the other videos that we did, we set price target on Qs. Just a recap, right? We were talking about 330, 325, 300, and possibly even $270 QQQ valuation. Right now in the overnight session, the Qs has fallen from $341 to $334, so getting closer and closer to that target, right? And so you may be asking yourself, hey Charles, what's going on? Why do we have this whole title, War and Rumors of War? Well, because the situation was going on in Ukraine, right? This has actually kind of been the biggest flagging, the biggest signaling that there is volatility coming into the market, right? I don't think any of what's happening is unexpected, right? Pretty much, Vladimir Putin and Russia was building up their troops and their armaments along the around the border that they share with Ukraine, right? Some very interesting things about Russia and Ukraine, right? Ukraine, does practice democracy, right? They have elections. They have somebody that they vote in, right? And so, the Russians, they say they have elections, but who knows, right? What really happens? But it's a communist system versus democracy, which is more of a Western ideology. Ukraine also shares a flat border with Russia as well, right? And so most countries are actually separated by some kind of geological feature, right? And so typically, it may be like a mountain range, okay? It may be like forests or desert, or it may be like a body of water, right? Those are some of the traditional borders of countries, right? And so what makes Ukraine very special is that it's a flat border, right? And so let's assume that anyone were to ever wanted to invade Russia, right? They would just have to kind of drive through Ukraine. And so from that point of view, it creates a sticky situation for Moscow because they're always thinking, hey, if anybody ever wants to mess with us, right, they could just kind of roll through Ukraine and then, have, logistically have access to Russia. So there is that kind of landmass geopolitical issue, right? Of course, you have the political issue, right? Obviously, they're communists. They're always wanting to kind of how can I put this? Exert influence around their part of the hemisphere, right? So here, over here on the Western Hemisphere in the Americas, we don't really want communist countries anywhere near here, right? So, we've had some, communist and communist light and socialist countries in South America. We've had some political parties in the Caribbean that were more right leaning than the America would like. And we've seen time and time again, the biggest example is Cuba, right? Like obviously, the confrontation with Cuba, pretty much expresses, pretty much what's happening right now between Russia and Ukraine, right? You have a country that, is aligned politically differently than ours, right? And then a country that is relatively close to the United States from which you could possibly launch an attack. Again, it creates a strong political ideological difference, and it also creates a potential security risk, right? And so what makes the situation with Russia very dicey, okay, Russia and Ukraine very dicey is, if you look at it just from not anything to have to do with morals, right? When you're talking about power, when you're talking about the game of kings, you're not talking about what's right or what's wrong. It's about, hey, what are the levers of power? How do we consolidate it? How do we gain it, right? And so, to kind of maintain its formal integrity, as a nation, as a state, and to protect its sphere of influence, from that point of view, that is Russia's, quote unquote credible. I'm not making a decision whether it's right or wrong, right? Because it's not a right or wrong thing. But Russia, from their point of view, has a concern over, this kind of brewing issue with Ukraine, especially with them potentially becoming part of NATO, which would give them full access to like the defense of NATO if they were to become a NATO country. So it's a very dicey and a very sensitive issue, right? And so we're seeing the troubles here play out in the stock market, right? And so before we conclude with the actual stock market analysis, I'd like my man Kendell to just give us a quick reset. Kendell, Mike is on you, my brother.
Thanks, Charles. Appreciate that, brother. Once again, it's on. Going over stock tickers, stock talk right now. Actually, the whole market. War and rumors of war. Charles has been breaking it down. What's going on with Russia and Ukraine. I think this conversation will be very insightful. So do yourself a favor and listen closely. Also, at the top of the page, you see that there is a link to the YouTube channel. If you want to take a look at the charts while Charles is breaking everything down, then go ahead and click on that link and go on over to YouTube, and you can see the charts being broken down. So without further ado, I'm going to turn the room back over to my man Charles so that he can get into what everyone is really here for. Charles, is on you.
Thank you, brother Kendell. All right, so all right, let's get back to it here. So, so we are in a very precarious place that we haven't been at in a very long time. We have not been under the weekly 50 in the Qs since the pandemic, right? And so this is looking like less of a correction and more like something possibly more. And more like, something else, like a either deep correction or possibly the inner workings of a crash. And let me tell you, team, that could happen very quickly, right? And so as you can see from this chart here on the weekly time frame of the Qs, notice all these open gaps, right? Each one of these dotted lines represents a gap in the chart, right? And so the old adage is that most gaps close. We also had a weekly squeeze fire off on the Qs last week, and my indicator set is letting me know that this squeeze, right, is worth about 20 points either to the upside or the downside. And based on the shape of the histogram is pointing down, so we're probably going to squeeze lower about 20 points from here at least. And so on average, it's about 20 points. Right here, again, we're at 340 Qs. We put out some price targets. We're at 334. Excuse me. I'm looking at the futures here, right? So we're at 334 Qs. Last week, we established some price targets to the downside. 330, 325, 300, and 275 on the Qs, right? And so, yeah, that is starting to play out here just a bit. Just want to go over the FANG names, right? Okay. Look at Facebook here, right? It was literally weeks ago that Facebook hit an all-time high at 384 and the sun was shining and things were looking good. And today, Facebook is $200, right? There's problems in the weekly time frame here because not only are we coming down, but we're also squeezing more to the downside. And there's some open gaps here at 194, 189, 178, and 155. And those are pandemic level gaps, team, right? So if you're thinking about catching the fall knife on Facebook, I would just hold up, pump the brakes, and relax because, we may still have much lower to go. Netflix, okay? Same thing. We're under the weekly 200. We went up, bounced, tested, and we're bounced to the downside, right? And so, typically around the weekly 200, you should have some kind of support here. But you have the weekly 8 passing under the 21 and the 50. And so, eventually, right, this weekly 8 will pass under the weekly 21 weekly 200 if the price doesn't continue forward. And if that's the case, expect Netflix to possibly also go lower. Okay. Let's look at Microsoft here. Okay. And you might be asking yourself, hey, Charles, why do we care about these stocks? Well, the only thing that's holding the entire market together are the FANG names, pretty much, right? As the FANG names go, so does the rest of the market. Market breadth has been terrible, right? For the past 2.5, 3 years, pretty much if Apple and Amazon was green on the day, more than likely the market was green on the day, right? And so these FANG names exert an incredible weighting in both the Qs, SPY, and the YM, right? The Dow Jones Industrials. And so, hey, we have to pay attention to what the FANG names are going to do because 9 times out of 10, if the FANG names are down, your favorite stock or ticker is also going to be down, right? And so as we grow from just being newbie traders to being kind of, intermediate, right, and more moderate traders, and you would learn to first look at the index, then you break it down to the sector, then you break it down to the individual stocks, right? And so right now we're looking at the index because, again, the index is kind of throwing everything around, so we have to pay attention to it. So here on Microsoft here, on the week, again, we're looking at the weekly time frame, right? We've got the weekly 8 passing under the weekly 21 bearish signal. We also could not hold the weekly 50, which is insane, right? We went down, we tested it in January, we bounced to the 8 and we came right back down. So we made a perfect bear flag, and I think we're going lower, okay? Price target on Microsoft here, 280 and then 260 possibly to the downside, right? We also have a monthly short setup on all these names, right? Tesla, okay. Again, remember what I said, right? All of these lines are basically areas where there are gaps in the chart, right? And so with all of these gaps in the chart, look at all the gaps that are in Tesla's chart, right? Like the gaps that are in Tesla's chart are pretty insane, right? Right? Give me 1 second here. Give me 1 second. Okay. I think we lost our main screen there. Just give me 1 second. Hey, Kendell, could you give us a quick reset, please? Just a quick reset for a second.
Absolutely. Welcome, everybody. We want to welcome you to the Brooklyn Traders. We're talking war and rumors of war, stock market recap. Charles is going over currently the FANG tickers as well as the major indices, and basically giving you his thoughts and what the charts are telling him. So thank you for being here tonight. You could have been anywhere, but you chose to be with us. So let's go ahead and jump back in as soon as Charles gets the technical issues taken care of on his side. Charles, you ready to go?
Yeah, almost ready. Give me 1 second. Oh, jeez.
All right, so we'll give Charles another.
Yep.
Another minute.
I'm back. My mistake, y'all. My mistake. Had a little technical foible here on my side that I do apologize for. But yeah. And so, team, the main issue here is that, the main issue that we're having, right, is that, there's just too many charts. That are just been angled, to the downside, right? And so, You should just really kind of sit on your cash, sit on your hands, and just really, really just be patient with this market, right? Because this market is not like in like a kind of mode where you could just buy the dip. This is not a buy the dip market. This is more of a market that you should just sit on your hands, sit on your cash until things want to turn themselves around. So that's basically it, team. We were here for a good time and not a long time tonight. And so I want to thank everybody for being here. Check us out at brooklyntraders.net. I see some people out there familiar to me: Nikki, Jonathan, the other Jonathan, Efi, Taria, Shannon, Kenneth, Minaro, Ko, and Ruby. I want to thank everybody for being here today. And hey, team, listen, thanks, God bless. And again, just sit in cash, right? Because a lot of these tickers, they are in pretty bad shape. So again, team, thanks. And just watch out. Just be careful out there, okay? Do not get clapped. Don't get clapped, all right? So thanks and take care, everybody. Take care, everybody.
Study up, everybody. Study.
Yep. And sit on your cash. Sit on your cash. Don't try to be a hero out there. Don't get clapped.